Hey guys, welcome to the channel. I'm Sheen, your host. This is Money Matters. In this channel, we talk about money, finance, how to grow your money, how to invest your money, how to make money work hard for you. Guys, consider subscribing if you haven't yet already. Give me a thumbs up, really helps out the channel, pushes YouTube algorithm, spreads my video, spreads my channel to more and more people. Thank you very much. Let's get started. We're going to talk about GreenPower Motor Company. This is an EV stock that not a lot of people have been talking about. It's only the last couple of days that people have actually been talking about this stock, but it was actually on my radar for more than a week now, but I did not do my due diligence. I did not look into this early enough, and I wish I really did because I could have bought this stock for a dollar or under a dollar just a week ago. But let's get into it. So this is GreenPower Motor Company. This is their stock chart. Look at this rocket take off. It is buy, buy, buy. People are buying this up. It closed 18% on the day for $1.63. Just a few weeks ago, a few months ago, it was trading at under a dollar at 60 cents, 70 cents. So look at this. 5-day performance on this, 48%. Year-to-date performance on this, 660%. Look at this 52-week range. 52-week range is 11 cents. 11 cents, you could have got this a year ago. Now it's trading for $1.85. The highest range was $1.85. Closed today at $1.65. Again, up roughly 18%. So somebody put me onto the trail of this stock about a week ago, and I really wish I would have got onto this trail. If I did, I would have got into this for a dollar or under. So big shout out to Big Country NBA 2K for life. Thank you very much for leaving me this comment. I really wish I would have looked into it, but it is what it is. GreenPower Motors, he posted about a week ago, just a little over a week ago, told me to look into this stock. It was trading for a dollar a share, but anyways, I hope you're watching this video. Big Country, thank you very much. I'm gonna go over my details about this stock, this company. So I hope you appreciate it. Thank you for putting me on the trail. So let's get started. This is a Canadian EV manufacturer. They are based in Vancouver, and they are looking to become listed on the NASDAQ. So that's going to be huge because right now they are on the OTC market, and so they're not that popular. Not a lot of people are paying attention to them. They're looking to come to the NASDAQ. When they come to the NASDAQ, it's going to be available on pretty much every single large platform, Robinhood, Webull, all these platforms. And this stock, I think, is absolutely going to blow up. So should we get into it? If we can't get into it now, like I have Fidelity, I could get into this now. So we're going to talk about it. We're going to talk about what the products they have. We're going to talk about their finances. So stay tuned to the end. Also, I'm going to give you a tip. If it might not be a good idea to get into it now. I would say if it goes more than $2, I would wait, and I'm going to explain to you why. At the end, that's going to be pretty much my last slide. So make sure you stay tuned to the end. If you could get into this stock, my personal opinion, not financial advice, not a financial advisor, but I think if you get into this stock for, let's say 160, 180, anything under $2, I would get into it right now. But if it's over $2, I would definitely wait, and I'm going to explain to you why. But anyways, let's get started. We're going to talk about GreenPower. So they are a battery EV, zero emissions vehicle. They specialize in pretty much shuttle buses, school buses, public transportation. So think about airport transportation, city transportation, city buses, school buses. So they really specialize in moving people, big vehicles that move a lot of people. They are the only electric bus manufacturer that has a full line of all-purpose built zero emissions vehicles in their respective markets. So their biggest product is the EV Star. So this is the EV Star. Check out this video. Basically, it is a powertrain and a cabin. And so you could put a cube onto this, and pretty much it could be customizable to anything the customer wants. So mainly these are for airport transportation, shuttle buses, things like that. I mean, you could also modify it to become some type of like food truck, food delivery truck. That's why it's so cool, so interesting about their platform is that cabin is completely customizable to whatever the customer wants. The next one is this beast of a vehicle. It is the Beast, as a school bus, it properly named the Beast Battery Electric Automotive School Transportation. So it has 150 miles, which is plenty of miles to pick up students, drop off students, in the morning, pick up all the students, drop them off to school, go back to station, charge, be ready for picking them back up from school. 150 miles, definitely plenty of charge for such a huge vehicle. Holds 90 people on their school bus. So they just got order for 10 of these buses back in July. So again, like I'm saying, they already are taking orders and delivering. So that is a lot to say for a EV company in 2020 that is already manufacturing and delivering vehicles. That's, I'm not going to name other companies, but there are companies that are not able to do this right now in 2020. So this opportunity for school buses is humongous. Look at this, 480,000 school buses across the United States, 26 million students transported, roughly 6 billion miles driven. So look at this. This is an absolute beast, and it's an absolute beast of a market. Pretty much every single market is transitioning out of combustion engines, and school buses are going to be one of them. Shuttle transportation, airport transportation, city buses, all of this is going to have major, massive disruption. So let's look at their financials. So this is their balance sheet. They have a pretty good balance sheet. Current liabilities is 7.3 million and current assets is 8.1 million. So they are definitely able to cover all their current liabilities. So they could be debt free in the short term. They only have $451,000 in cash though, and I think that is pretty low, which is why I am thinking towards the end of the video, I'll explain why. Again, this is part of it. Why that if the stock becomes over $2, I would recommend do not buy. If it's over $2, I'm going to explain why. It goes into this cash situation. They only have $451,000 in cash. That is nothing when you are an auto manufacturer. That is like peanuts. So anyways, let's go on. This is their revenue. So they 2x their revenue, more than 2x their revenue from 2019 to 2020. They bumped up from 6 million to over 13 million, roughly a $7.4 million gain on their top line. So what's interesting about that is look at their net loss. So they're not a profitable company, so they are still reporting net losses. But from 2019 to 2020, they only had a net loss of 601,000. So 601,000 net loss, but they 2x their revenue, more than $7 million gain on their revenue. So let's go over some highlights for their fiscal year 2020. They had $13.5 million compared to $6.1 million from the previous year, which is an increase of 122%. They sold at least 68 all-electric vehicles. They have delivered 33 EV stars, and they still have 70 to be delivered to Green Commuter. That is the company that purchased their vehicles. They delivered 7 EV stars to Sacramento Regional Transit during the year, so they are delivering to Sacramento for their city buses. Look at this. They have 71 HVIP approved voucher requests pending relating to sales in California. So whenever they sell vehicles in California, they get this voucher. All these vouchers, 71 vouchers, are worth $7 million. That is unbelievable. So they're making money, in California because they get vouchers to sell their vehicles. For all these vehicles they sell, they get a bonus $7 million that's waiting to come to them. All right, so this is the end. So like I said, they only have about a little over $400,000 in cash. That is nothing. They need a lot of cash to scale, to deliver their vehicles. They're starting to get popular. They're going to get listed on the NASDAQ, so they're about to blow up. They are really at the bottom, at the ground floor. So as soon as they get into the NASDAQ, people are going to know about them. People are going to talk about them. People like me are going to make more and more videos about them. And so they're going to blow up. They're going to be able to raise more money because their stock price has gone up like 600% in the past few months. So they are prime to start raising more money, do a capital raise. So I think if it goes into the $2 or above, in the $3-4 range, the stock, they are going to dilute. They're going to dilute short shares. They're going to issue more shares, and they're going to raise money, and which is a smart move, which I fully expect them to do. They're not going to be able to grow at a fast enough pace unless they raise more capital. So I fully expect them to be raising capital if their stock price goes up to $3-4. So that is why if it's under $2, in my opinion, right now, if it's under $2, it's like $1.80. It is the time to buy. It is time to buy and get into this before they start diluting shares, because I think when it goes up to the $4 price point, they're going to dilute shares because they need money. They need that cash. They only have $400,000 in cash. That is nothing. Also, look at this. This is their total shares right now is 108 million shares out there, but 44 million shares are on the way. 44 million shares are on the way without that previous dilution that I think they're going to do if their stock goes up to like $4 or $5. This is shares that are going to be diluted on top of that, in my opinion. So $44 million, 44 million shares are going to be on the way because they have stock options, roughly $6.9 million stock options, 25 million warrants, and close to 12 million of conversions of debentures. So if you add that all up, that's 44 million shares. So what do you think the people that are, so look on the bottom here on the notes in the fine print. So what do you think is going to happen when this stock price, when this share hits the NASDAQ, it hits Robinhood, and people hear about this EV company that is unheard of, nobody's been talking about them, and it's only $1.80 a share? What do you think is going to happen? People are going to buy this up like nobody's business. It's going to hit Robinhood. It's going to hit Webull. It's going to hit all these platforms. People are going to buy this up to, I think, $3, $4, maybe even $5 a share. And what do you think is going to happen when there is 6.9 million people, 6.9 million stock options that are able to be executed at anywhere from 35 cents to 75 cents per share. 25 million warrants that are able to be executed at anywhere from 50 cents a share to $1.10 a share. So, you know, people that have these warrants and stock options, they could exercise their option. They could pay 50 cents to get this stock once the stock goes up to $3, $4, $5. So just think about that. That's like more than triple, more than quadrupling your money. So when the stock price goes up, these people are fully going to be exercising these options, and it's going to flood the market with more shares. And I think the company is going to do a fundraising. They're going to raise more capital, and that's going to further dilute the shares. So if this stock price goes up above, like I said, $3, be ready for massive dilution. So that's why my personal opinion, not financial advice, if you could get into this stock at under $2, you're gonna be sitting pretty good. But if it's over $2, probably wait. If it's over $3, probably wait for this massive stock dilution to happen, and then get into it. My personal opinion. Take it for what it is. Hope you found some value in this video. Consider subscribing if you haven't yet already. Give me a thumbs up. Catch you in the next one. Have an awesome weekend, guys. Peace.